I've seen a lot of investment absurdities just the last few days that I think, in all honesty, should be a warning for investors. One of which is the meme coin poking fun at President Joe Biden, the Boden coin up over 160,000% this past month. I view these types of meme coins as complete, absolute garbage. I wish this were an April Fool's prank. It's not. This Boden market, based on, I believe, Coinbase, saying that it has a market cap of $220 million. People are speculating on this Boden, saying, yeah, based on the price, this should be worth hundreds of millions of dollars. This picture, this idea of the Boden coin trading around 32 cents. You look at Trump Media and Technology Group, which is bringing the Truth Social media app, which I'd encourage you to check it out just as a joke. You know, like how they frame it is, and look, no matter what side of the political spectrum you are, the reality is Truth Social is mice nuts relative to the mega social media platforms out there, including Elon Musk's, Twitter, X. So I just view this as just absurd. And the financials themselves, you'll see in just a second. So you have meme coins effectively on the left with the Boden. Now, I don't think President Biden is benefiting from that coin other than the pure absurdity of it. And then you have Trump. Now, he actually is benefiting from this because he has a stake in this company, and it's being valued worth billions of dollars in the public markets, partly because of the limited float, but also just because people are using it as a speculative vehicle. People are using it like a chip in a casino, saying, hey, this is how much I think the Donald Trump brand is worth, even though there's this huge disconnect between the actual free cash flows that this business will generate, which is the value, the end value of anything, and this sort of speculative further. Because when you look at the actual results, this is absolute garbage. I mean, this is something where you're talking about $4 million in revenue, 50 million plus loss versus several billion dollars in market cap. It's just bananas to me. It is purely speculation at its worst, looking at this. So then going from politics to the dinner table, let's look at Wingstop. Here it is, franchisor in the restaurant industry. What are they doing? They're specializing in serving classic wings, boneless wings, tenders, chicken sandwiches. And man, this chicken stock is flying. You're looking at the stock up over the last year, up over 100%, over the past 5 years, up over 400%. I mean, this chicken has wings. Man, Wingstop. Price to sales record ratio, which means, by the way, that investors are saying, hey, your growth in the past, it'll do even better. Profit margins will even better in the future. That's what happens when you have record valuation multiples. That's effectively saying, yeah, whatever happened in the past, it's only going to get better. We're going to have super chickens in the future. Super chicken on the menu in Wingstop in the future. Looking at, how does this perform? Running it through AI ticker chat, which provides, a fundamental framework. See the link below. First month is free, saying, hey, how could it grow? What's the profit margins? What's an end multiple? Personally, I think it's actually more, aggressive and generous with the valuation than I personally would give it. It's saying, sort of in a base case, even assuming teens growth, improvement in profitability, 30 times end multiple, it's still saying over 50% downside. This is why I like checking in with AI ticker chat and the AI predict feature, just because it's a good point to start with, thinking about, okay, what's a range of valuations, and how do I agree or disagree with it? This is based on leveraging artificial intelligence to make a stab, at how in this case, an absurd asset could perform over time. Okay, so what is it to do when you're facing absurdities like this? First of all, in full disclosure, this is not financial advice. Also, quick plug, just this past weekend, a premium member of the Unrivaled Investing community shared the following. This is a direct quote. I got introduced to the markets as a speculator during the 2020-2021 bubble. Your content really helped me understand long-term investing. Most of the online friends I made during the bubble are still speculating. I'm trying to convince them to join your membership. The unrealized profits from, and he talks about two of the holdings that I've personally called out, is enough to cover 302 years of membership. This is not an exaggeration. You can actually see this direct quote on our exclusive Discord that is available for premium subscribers. There's also educational materials. If you're interested in learning about how to read financial statements or valuing stocks, both of those courses are available at unrivaledinvesting.com. When I look at absurdities in the market, I do think it is worthwhile to check your cash balances. I personally keep my cash at Interactive Brokers, which is yielding over 4.8%. And as we look at the betting markets, Kalshi saying, what are the number of rate cuts this year, going from over 5 rate cuts this year, just as bet in January, to to around 2. That means that cash balance is actually going to hold its value longer, because it's effectively saying, hey, the number of rate cuts that you're expecting, that in terms of that cash yield, it's unlikely that you're going to be seeing a lot more cuts. So this means maybe inflation isn't as well under control as maybe, the markets were previously suggesting. This is a really interesting data point. You also overlaid this with gold, which has been breaking higher, up around 15%, a little under 15% over the past year. At the same time, that long-dated treasuries, TLT, down around 10% this past year. So let's put our thinking caps on. Let's have our chicken sandwich in one hand, our thinking cap on, looking at our meme coins. And, what are intelligent allocators thinking in this environment? Well, they're probably looking at, because a lot of people can't lean into the pain. And so they're saying, long-dated bonds, U.S. bonds, if you're an endowment, you're a pension fund, if you're a central bank around the world, you might say, hey, I don't want to own these long-dated U.S. bonds, because it continues to be a sore point. And maybe that's why you're seeing gold starting to break higher, is people saying, hey, I don't want to own U.S. treasuries. They can't get their balance sheet in order. They can't get their deficit spending in order. Maybe I want to own more gold. Now, Buffett, he's made his comment that gold, you can put it all like in a cube and you can fondle it. And at the end of the day, you're not going to get any extra benefits out of it. It's a friend with no benefits, owning gold. But clearly, investors have done well. Up 15% versus, let's say, if you were to say, I wanted to own long dated treasuries. So I look at this and think these are signals to the market that there could be challenges ahead, because if this really starts to break down further and ultimately means higher rates, because if more and more investors say, hey, I would rather hold gold, which doesn't yield anything, and you increasingly see momentum there, versus holding treasuries, which are losing their value, meaning interest rates move higher, that could be a pressure and risk for risk assets like stocks, especially when you see absurdities and absurd valuations like I just talked about. I think ultimately it comes down to what are the types of games you want to play. And, some people play macro, some people play, there's a phrase, play stupid game, win stupid prizes. My view is I want to play games that I enjoy, that hopefully I can prosper at, where I hopefully have an edge. So that's what I'm focusing on. And for me, that means focusing on companies where ideally there's founder-led, there's a lot of alignment, and I can think, okay, what's actually going to drive my returns over time? Because looking at macro, that is a really tough game. There's only a few people that have done really well in terms of macro investing over time. Even the greats like Warren Buffett, he'd acknowledge, and you could read his annual letters, you could see that macro investing isn't how he built his fortune. And I think it comes down to 3 engines when you're thinking about investing. And I've talked about this repeatedly on this channel. In terms of the 3 engines, I just watched Maverick, the Top Gun movie. It was pretty sweet. And so that's why I was thinking, like, man, it would be cool to have an image of a jet with these 3 engines. The 3 engines: valuation. So ideally you get some sort of valuation benefit over time. The core fundamentals of the business, is this expanding over time? You're more likely to get that, by the way, if you have a founder at the helm. More likely, I think. More likely to have intelligent capital allocation if there's a founder at the helm, meaning there's alignment with the shareholders and the founder thinking about building something long term. And then the third is the free cash flow of the business. And so if you can have free cash flow being returned to you as a shareholder, that helps juice the odds further. And so for me personally, as I look at my own investment journey, I'm thinking about, can I find things at, let's say, 20 to 30 times free cash flow? If I can get it for less, even better. But if it's around 20 to 30 times free cash flow and growing at very good speeds, then you're looking at something where, let's say it's 30 times free cash flow. Just as an example, because I was actually buying a stock with this profile earlier today before I made this video, around 30 times free cash flow. If you buy something around 30 times free cash flow, then that means conversely, that's equivalent of around a 3% plus free cash flow yield. 1 divided by 30, 3.3%. So you're getting that 3% free cash flow yield that management can use to buy back stock. They can use as a dividend. That's 3% sort of a baseline that you should think is your return versus, once again, treasuries, 4 or 5%, cash at 4.8%. So cash does have a place in one's portfolio, but let's just think about these components. Okay, so you have this minimum free cash flow, the valuation starting point. Let's say if you're 20 times closer to 5%, 30 times closer to 3%. So that's sort of that floor. Then you have what's the underlying organic growth of this business. In this case, I was talking about a stock that is growing close to 40%. Let's be conservative, think it's somewhere between 10 and 20% in the years ahead. So that means even if valuation doesn't expand in the years ahead, and so doesn't hurt you, you don't benefit from either, you're getting that, let's say 3% a year plus the organic growth of 10% to 20% a year. So now you're automatically talking about a very interesting return. And then, if it comes down to, do you think you'll get that valuation expansion? So you think about valuation expansion, free cash flow, organic growth, looking at those three engines. That's ultimately, in my opinion, a much better game where I can pencil out something that I feel comfortable about. And so it honestly, all these absurdities remind me of a quote from Charlie Munger. May he rest in peace. Sad that he's gone. That, when someone would bring up something that he just really, really didn't like, he said it was his nature sort of just to ignore it and pretend it wasn't there. And so I think when you're looking at the Geo Boden up 160,000%, it's worthwhile for you to know about it, maybe, but don't get the FOMO that you're like, oh, I gotta go find the next speculative asset. Maybe I'll make a chicken sandwich meme coin that can go out. Like literally, I think someone made a Costco hot dog meme coin that's like, hey, well, the Costco hot dog's $1.50. That's never a good change. Maybe we can make a meme coin that'll go to $1.50 that'll be worth billions of dollars. I mean, it's absurd. And when you see these types of absurdities, I think it's just best to ignore them versus try to say, hey, how can I profit from them? Find things that you could feel comfortable about. And maybe even things where you feel good about, like, hey, telling your future spouse, telling your significant other, like, yes, I made my money, or I helped augment my savings by owning reputable assets versus the Boden or the Truth Social, app that, clearly is not worth billions of dollars, but people are saying, huzzah, $5 million, $4 million in sales, billions of dollars. Why not billions? It's absurd. Anywho, I hope this video has been helpful for you. Thanks so much for tuning into Unrivaled Investing.